Sweet. What time is it? We're almost there. I think we're going with something like this. It'll be somewhere in the middle, like so. This is what that's looking like. We gotta get up early again. Come on, man. Come on, man. Come on, man. Oh yeah, we still have to wait. Just a few minutes. Just a few minutes. We still have to wait. We still have to wait. Just a few minutes. Just a few minutes. Alright. Oh yeah, we are on 60 minutes here. We're gonna throw this on 60 minutes. We just want to get through this as fast as we can. Because we need to... No. That needs to go there. Where's yellow at? We're gonna bring that up to right there. Boom. That is how that one's going to work. So bring that down. We're gonna bring this to right there. Oh, this goes up here. Like so. That stays there. This is gonna just come right into there somewhere. Oh, you stay there. You're gonna come into here somewhere. You don't get to move. You are moving. Cool. This is where we're gonna move you at. Something like that. Something like that. Cool. I think that's it.
This message is brought to you by Apple Card. Picture this. Somewhere in the world, an Apple Card user is getting 3% daily cash back on the purchase of an iPhone 16 at Apple. That's not all. They also earned 2% back on the new shoes they bought using Apple Pay. Visit apple.co/card calculator and see how much daily cash back you can earn. Subject to credit approval. Apple Card issued by Goldman Sachs Bank USA, Salt Lake City branch. Terms and more at applecard.com.
So that goes there. That goes there. Boom. It's here. This is there. That's pretty much it. Makes sense. So we put this back to 1 hour. We can see the same thing. Yes. Yes. Almost. Almost time. It is almost time. Almost. Alright. Let's hit up the 5 real quick. Looks like it'll probably stay within that in the next few minutes, but we don't know. Oh dang. Oh dang. New window. Ooh. What we said to do. Then we got. Come on, man. Oh, that's why we're just looking at the wrong thing. Time frames are 15. All right, we're so close to this. So 6:30. So far, this has been the watch. This has been the top. The bottom is happening now. What we're looking at. Top is here. Top is here. And whatever this ends up to be down there. We're gonna have this coming somewhere into play. All right. Okay, so we have our zones. We have our zones. Let's get our copy trade amounts going. Make sure we switch this to 1. I'm gonna do save that there. I don't know why it's being weird. All right.
Unlock a new world of efficiency with Asana. Automate workflows so your team can have less follow-up and more follow-through. Try for free today at asana.com.
Come on. Alright, so it's punching back into the middle. Sorry. We're alive now. Ready to go. Finally.
Order filled. Stop filled.
Okay. I mean, it'll probably go up now. It will. Probably shouldn't have done that. Alright, it's all good. It's all good. All good. It's all good.
When was it? 1928. I can't even remember the date. Don't take me on my word there. But there was a situation where price came very close to wiping out that entire decline, and then just fell short of the all-time highs, and then we start seeing one heck of a decline again. You know, if you speak to your Elliott wave dudes, I mean, I take that with a pinch of salt, but all of them sort of thinking that we're either going to push a new high and then get the big decline, or the big decline's already started with, or more sideways volatility, which I've been actually saying it's probably what we're going to be seeing in the bigger picture for, I would say, up until the end of the year. Huge ranges, fluctuations. Now we're talking daily time frame, whatever the case might be. V-shaped bottom followed. Now we've just been pushing straight up. Now we sort of there at that brink of breaking out, but it's not. You know, it's all of the global conflict and what's happening in the US, all that division. Is all of that actually going to be the crack of the whip now to give us another decline? And I won't be surprised if that actually happens. I won't be surprised.
Troy, I have one question for you, because you're there in the fire. So you are in the U.S. and you can understand better than me. So there are two things that I want actually to ask you. One thing is your opinion about this tariff war, and how people react about tariff war, and where is that leading in point of view as a average American. And another thing which is very important for our forex traders is the federal funds rate is a 0.5%. We expect on Wednesday again to have nothing neither decrease. So again 4.5%. But what they want to see is this is how I understand that.
Order Trump, filled.
He wants to decrease federal funds rate, but Fed didn't do that, and this is how I see that. Can you tell me what is your expectation about that, and how do you see that stuff related to the interest rate in US?
Well, first of all, the Federal Reserve has a dual mandate. They're trying to stabilize prices and to support employment. And so there are going to be times when those two ideas conflict. And before I get into this, first of all, you have to understand I'm a macroeconomic guy. Okay, so I love the macro side. And I think we are very fortunate to have set up our government so that there are competing branches to try to keep power, an equalization of power. And the fact that the Fed is semi-autonomous to the political maneuverings of those who must not be named, so I think that the Fed is okay. So unemployment's bad. High unemployment is bad. Super low unemployment is also bad.
Order filled.
From the Fed perspective, inflation is the boogeyman. Inflation is the boogeyman. We are going to do everything in our power to control inflation. If we have to sacrifice jobs, that's just part of it. Okay, that's the way the Fed kind of thinks. And so what, you know, and I agree that I do not like the standard answer is, what does the data say, right? Let's wait till the data. And we get this from, you know, the ECB says this all the time. Well, we're going to be data dependent. We're waiting on data. And the Fed does the same thing. I think that that's the most conservative way to look at managing the overall economy, even though there's a lag time. So when the Fed raises rates, there's a lag time before that actually hits the economy, and vice versa lowers. You know, we lower rates, everybody's not gonna go, ooh, let's go spend money. You know, it takes time for that to kind of flow through the market and flow through the different levels of the economy. And so I think that the Fed is by far more concerned about inflation than they are about employment. And so they are going to do everything they can possibly do. Now, obviously they're walking a very tight line because Trump is putting pressure to lower rates. The problem is that to lower rates, we need to have a slowing economy, first of all. Second, we have to have inflation at least on a trajectory to the downside, and we just don't have, you know, we don't have evidence of any of that yet. On top of that, the tariffs have a built-in inflationary bias. All right, if China, and this is the way it works. I mean, and there's so much from a macroeconomics perspective. There's so much research that's been done on tariffs that the academics have pretty much, there's no discussion. Tariffs are bad. Tariffs create you know, intra-country problems that do not help either country, right? And we've studied this over, I mean, that's like economics 101. If country A does a tariff, country B responds by raising rates, by raising prices. When prices go up, what happens? Demand goes down. If demand goes down, country A is still is going to pay. They're going to buy less because it's more expensive. And country B will then have to lay off workers and reduce production so that supply goes down. And we know this was a push and pull between supply and demand and prices, right? Yeah. And tariffs just muck it up, really muck it up badly. And so the only time that in my opinion, the only time a tariff is a positive thing is when you have a new industry. Say a country in South America suddenly finds iron ore, and they didn't have this before. Yeah. And now they're competing with all the other people who have iron ore to produce iron or to produce steel, and it's a brand new industry. That's when a tariff can help give that struggling industry a chance to become competitive with, you know, the rest of the world. Those are far and few between. And they should be very, very careful how they use those tariffs. Those tariffs should be short term. They should have okay, we're going to have a tariff. We're going to give you guys 10 years, but in 10 years, it's a level playing field and you better be up to speed. You know, you give them a specific time, and you don't go with 150% tariff, because 150% tariff is going to what? It's going to stop demand. If we stop demand, you know, both countries suffer, majorly suffer, right? And so the tariff is just a nightmare, period, no matter how you slice it. Now, the good news is, I guess it's good, is that it's called the taco trade, if you're familiar with the taco trade. So taco, everybody's calling Trump the taco, TACO. Trump always chickens out. That's what it stands for. It's it's a phrase on Wall Street right now, that Trump will always back off. So he comes out with a 150% tariff, and by the time we're done, it's 5%, right? You know,
shock and awe.
Yeah, right. So it's the come out with the big stick, I'm gonna beat on you, and then no, let's be friends, you know, kind of thing. And it's very frustrating on our side too, because you know, we're seeing prices are just now starting to go up, and you know, the retail sales were down. I think we're going to continue to see that over the summer as more and more goods that are coming in are elevated, because what happens, it's just like you know, anytime you have a rise in taxes or a rise in tariffs, and tariffs is a form of taxation, the companies will take part of that. So if it's a 5% tax, they'll take half of that, and they'll just take a lower margin in order to maintain demand and maintain their price. And the other part of that then flows to the supplier, and sometimes the supplier will also take half of that, and so you end up with a very low net price increase or decrease. However, you're penalizing the one country as well as the supplying country, and of course that will then have ripple effects over time. In the US, there's been a crazy amount of pressure to not raise prices, and there's been a lot of pushback. GM, Ford, Walmart, these guys have all basically told Trump, hey, we're gonna have to raise prices. And he's like, no, don't raise prices. And so you know, on one side, you're punishing all the shareholders that own Walmart stock, and you're hopefully benefiting the populace of the U.S. Anyway, it's just a complete mess. And I think that as we start seeing the Fed's going to do absolutely nothing until it has to. And I think that that's because the political side is so ugly. If they cut rates preemptively without the data, they're capitulating to Trump. If they don't, and the economy gets worse, then they are shucking their responsibility to maintain the economy, right? So they're screwed regardless of what happens, but they don't want to look like they're caving into Trump. At the same time, they don't want to be preemptive and try to guesstimate what the economy is doing without hard numbers. So we're sort of stuck in this, I'm doing nothing until I absolutely have to. And you know, Europe has lowered rates many times. You're definitely on a downward rate cycle, and the U.S. is not. The U.S. has just stayed. But that's because of inflation. We cannot afford inflation because of our debt, which is a whole nother piece to this picture. It makes total sense to lower interest rates, because then we pay less interest on all of our debt. But at the same time, when you lower interest rates, what happens to the price of the dollar? The dollar goes down, right? Because it's not as valuable. It doesn't get that 4.5% interest rate. It only gets 3.5% interest rate. Well, now I don't want to own dollars. So there's so many push and pulls. You know, I think we're at, like I said, I think we're at a tipping point. We are either going to top out here as the data starts coming in more and more negative, and then once the Fed starts lowering rates, you know, it's going to be a rush to the bottom. And if the U.S. starts lowering rates, I think all the other countries will also lower rates to keep their currencies. I mean, my God, look at the euro; it's a 115. You know, it was only I just took a trip to Portugal in January. It was $1.03. I mean, I could turn around and do the same trip for 12% less, right? Just on the currency exchange. So, you know, Europe can't afford for the euro to go to 120, right? So they'll cut rates. They'll try to keep that euro, where it's at least in a certain range against the dollar or against the yuan, right?
Down the highway,
so I think you opened a huge can of worms with this question.
Over 4,000 hotels
there's so much going on politically, worldwide. Obviously, haven't even talked about the shift from manufacturing in China to trying to shift that to other places. And is that going to change the entire flow of goods over time? What happens if the Chinese, the middle class starts buying? I mean, that's such an untapped resource. India is another country that I'm watching. India's middle class is starting to make money. They're starting to have disposable income, and that has the potential to change the world. 100 million people suddenly have money to do something. We don't know what they're going to do with it, but you know what I'm saying. I am very concerned about the U.S., the leadership, the mess. It seems like instead of staying in our lane, we have to be in everybody's lane. So you're in Russia, you're in Ukraine, you're in Israel, you're in Iran, you're, yelling at Jordan. It's just like, no, we need to really stay in our lane, fix our problems. And you don't say, all of a sudden, I'm going to cut U.S. aid because we can't afford it. Well, that's a good reason to cut it, but maybe you should say, okay, maybe there's some waste in there. Let's evaluate. Yeah. Let's see which countries really need that aid. Let's have some
sort of so many countries been very negatively affected with that.
Yes.
But I understand at the same time, that if it is wasteful expenditure, then, like you said, at least, take a step back, assess the situation again. But, as things go, it can be quite what he thinks could just be implemented at a whim, so it is it's a difficult situation. But anyway, I'm not going to try to get into the politics side on my side, but I do 100% believe what you're saying there is to be true, Troy. We also got some responses here from Robert. I don't know if you can see the chat there, Troy.
I cannot.
Yes.
So on the right hand side there, you should see the chat with a common sense section.
Got it. Okay.
Good morning, Robert, by the way. You're still on your way to work, I believe.
Robert is from US.
Yes, I think Robert is from the US.
What?
Well, sure. I think the last comment there, Robert, the poker face is only a poker thing, only works in poker. I think that what happens is in poker, what happens is you figure out that your opponent has a tell, and you can see when they are bluffing and when the poker face no longer works. And so the question is what is Trump's poker face, and at what point does China say, we are not going to talk, we're not listening to what you're saying, because you've bluffed so many times before, and I think that's the biggest concern is in this negotiation style, is that at some point everybody knows you're calling the bluff and that you really don't want to do whatever you're saying you're going to do. That unfortunately becomes extremely dangerous, because I think that Trump is going to get pushed into a corner where he has no alternative but to dig his heels in and stick to it. and that becomes very, very dangerous. You know, I think that we may see this play out in the Iran-Israel thing, where Trump comes out and says, you know, if there's an attack on a U.S. military base, we're going to go in all in. And the question then is, does he do it or does he back off? And I think he's going to get pushed into a place where his bluster is going to force him to actually follow through, and that will be a very negative thing. I just think I think it could be very, very dangerous if he gets into a position where he can't save face, right? And then that's where it gets really, really ugly.
Troy, I'm just taking a small trade on crude oil. I'm going to quickly run through that for you guys and the reasoning behind this. I'm taking a little stab at it. It missed most of a really nice move, but I don't think it's too late. So let's have a look quickly. Let's just share the right screen here, and I'll quickly talk you through that. Should come up now. Right, got my trading view chart here. Crude oil on a daily. Myself, and obviously I think the whole world was probably thinking that crude oil was in some sort of a descending triangle. I actually had a good conversation with Howard, which is quite into his Elliott wave analysis. And we both tended to agree that once a triangle of any sort, especially if it takes a really long time to form, when they do tend to end and price actually goes into the direction, in this case a descending triangle, bearish triangle, that you got to be quite careful, because that quite often triangles are quite often the penultimate correction within a, let's say, bullish or bearish phase. In this case, we had a bearish phase. Now, I'll talk about the trade in just a moment here that I took. It's just an intraday trade type of setup. But yesterday or last week, we were looking at this bounce to the upside.
Sacrifice account.
We were reckoning that price would potentially reach this little gap that occurred here towards the or beginning of April. And as you can see, I've also got my pitchforks here. They were my pitchforks using a shift pitchfork. Last week, beginning last week, we were looking at first objective around about 67.52, which was this, I can say, upper red dashed warning line. And then price very farly exceeded this upper red warning line and also broke this lower high that was set, and again, at the beginning of April. So this could potentially be, as they would call it, a change of character or break of previous price structure, right? So whereas your previous price structure was bearish, price made its move upwards and broke this lower high. Okay, didn't do it by quite some distance. Pulled back again, and again, price is in this case rather well respecting this shift pitchfork.
So that is
the reason I have a shift on here is if I use a standard pitchfork, and price is sort of like went below the boundaries of this lower median line. One could say it has now reached the center median line, and it's failed to close above there. All right, it did wick above it. I'm still expecting some more upside potential here. Maybe on today back to this median line around about 73.46. So that was just a bigger picture sort of expectation. If I have to drill down to a smaller time frame for you guys, you can see that I had
what it looks like.
a green zone over here and another one over here. Now this I actually did prior to our session today, and how I found those were basically using a pitchfork.
The thing that I'm looking at here is the volume. Notice how lots of volume happened.
Where is that
kind of
pitchfork?
stayed?
No.
We had a punch in volume.
There we go. This one I should be
See
using.
how much volume is.
So in this case, with price being so close, it actually just took out these highs that were set yesterday. My expectation was that whatever, if we would get a little decline, and this was before our session, price might find support at either one of these boxes and to at the very least take out yesterday's high, right?
To me,
Now it's already done that. It did achieve that objective, although I did not get into this trade down here. I'm actually trying to get into it a little bit higher up. Currently, we might be seeing some sort of a 1, 2, maybe a third, maybe correct a fourth with another push higher. So that is my hope, my expectation with this trade. These little boxes that I drew, they basically support at this lower dash median line here. If you draw a pitchfork,
Order filled.
So the upside from this low on Monday to this high on Monday, and Monday's high to this high low over here. Actually, we'll probably push today. Here. I think that's probably during the overnight session. You can see how well price has been sort of fluctuating between the lower median line and the center median line. It's actually been finding support quite a few times here at this 50% dash median line. Now, we'll have this one too early to say 100% which pitchfork setting is the best to use here. But if you use a shift pitchfork, you can see price just tagged that see the volume here starting to kick up. Lower red warning line here, or the 50% dash median line perfectly, which is also where I had that box. What I want to do now, to be honest with you, did want to take a stab at this as price actually before our session moved lower, and this is how I'm using my order execution platform here. Another piece of information that you can be using here is just to draw a trend line from this low. This platform does freeze sometimes. From this low over here to this high low over here, and all I did was then copy and paste it and projected it from this high low over here. And you can see that's sort of 3 different areas of market geometry where price basically found support.
No, we'll do that here. So we do have a gap here. We probably are going to smash up.
Now, typically when price reaches these market geometry lines,
next thing
I would like to see some sort of reaction from them. So you don't just go and place orders there and get into a trade. I should actually be sharing that screen over there.
Order filled.
So you can see I've got the order active over here. Just trading a very small lot size. Got my stop low, this low over here, around about 71.39. Again, now guys, I'm looking here at the pricing, the CFD side of things, not the futures. All right. And then I've got my target all the way up here. I'm going to change these colors a little bit later, aiming for 1 to 3 risk reward ratio.
Oh shoot, we gotta change our.
So I was talking about how I get into trades, and I wasn't showing the right screen there. So I'll just quickly show you on my trading view chart. I think that is probably the better way to do it.
That's a lot of missed opportunity. Highland makes enterprise
you can see prior to the 9 a.m. mark, price came into that area and bounced higher. As price moved lower, there were a lot of bearish fair value gaps that occurred to the downside.
Choose to lean
into it. Make them, let's say, red for bearish.
Every Mazda is engineered to give you effortless control.
Let's color that red. Right. Then you have another one over here. Price moved into that area, attempted to make its way back to the upside again, but then at the 9 a.m., boom, straight back into this lower area over here. And this is a trade that I actually missed the setup on. But if you were to look at what I can use for potential entry visuals, let me just hide that, is same thing here. As price spikes into that lower area, there was a fair value gap that formed, and price immediately reversed back to the upside again.
Now we're at a 1-to-1 basically. Not a big fan.
Broke the bearish fair value gap, creating an inverse fair value gap. Early. We had a retest of that area later again. That would have been a sweet spot to get in, and a strong move back upwards to the upside.
Per se.
So yeah, unfortunately missed this entry and this one here while we're having some nice chats on our side. But just from this move from this lower support area
We're
that
hoping to
I
take this
drew earlier
to a
on
good
prior to our
place
session.
here.
Let me just get my path tool out here. This could potentially be a 1, 2, 3, maybe corrective,
Then we
whatever
can
the case
actually
might be,
change the color
with
here
another move higher,
to
as I mentioned. So I got in round about these lows over here, and again hoping for a further push to the upside.
Okay, it looks like we'll have a little bit of
Although I do
retrace.
have
Don't know
a
how
higher
far
target
down it's gonna
objective around
come.
about 73.27 level,
Yes.
which is just over a 1-to-3 risk reward ratio. I'll actually go and color these things maybe a different lighter green so you guys can see
That is
later
the
on when I
scare
do an
right
update
now.
on this trade again what the hell's actually going on here. But that's the trade. That was the setup. Yeah, basically just performing top-down analysis, higher time frames, lower time frames, using market geometry on crude oil today. Swinging or sloping these angles into different directions, and when you do find these confluence areas, generally that is areas that price can target and find support or resistance at, and also then present really good trading opportunities, right? But rather than just placing orders there, like limit orders or resting orders, we'd like to see some sort of sign of a reversal, which is why I like to then drill down to a way smaller time frame, see if there's any sort of bearish fair value gaps that occurred into that area, and if they then get swiped to the upside, they become inverse fair value gaps, which can then also be an additional sort of sign, if I want to put it that way, that the market's actually getting ready to reverse. All right, so that's the setup in crude. Let's see how it goes.
Now that we kind of see this, look how much
good luck
happened there.
Thank you. Igor, do you spot something on your side?
Yes, I will just share my screen. Couple things happened
red day
in
today.
just a half hour.
We'll see.
So what I'm
So we're back
looking
at
for
the
right now is
retest line.
I'm seeing
We're seeing a lot of
little bit bearish outlook for a British pound dollar. So actually, as we spoke, we got bad results for a US dollar. That should expect a bullish price for the British pound dollar, but we have that news rejection. And last 3 hours we are bearish. And as we can see that today, from the early morning, the highest high was around the 1.3580, 90, that period. And
hope it actually bounces.
However, right now we are approaching to the low. We are at 1.3529. The next level of the confluence is 1.3570, which was the lowest point of the June 13, and then we can see maybe the bigger gain. But like I said, I think that 1.35 should hold today, but for the tomorrow I don't know anymore. So like I said, even that looks very good. We can already have some kind of the intraday bearish trend. I'm out of this trade because I don't have nice levels. We are not so good either for buy side, either for the sell side. So I'm out of this trade, as same as I'm out for the Aussie dollar, which is trying to break. And I'm watching Aussie dollar, for example. On Aussie dollar, we are some way we like starting to go out of this range, but in the end, when you analyze the price,
actually just really looks like we're gonna come back down through the
through
the range there, but we're gonna leave it in.
Price
is going
to more up, more down. Yes.
We are losing you.
You hear me well?
But you're fine now.
Oh, no problem. Excellent. I will try to restart lately. Sometimes when it's crowded, there is a problem with that. But anyhow, when we analyze this, we can see that it's really uncommon movements right now, especially especially for Aussie dollar. So look, it's like I watch the report from the earthquake, you know, just the up down, and bigger and bigger amplitude every single time. So this is not good for trading and good for traders for sure. As same as Kiwi dollar, as you can see, the same pattern, just increase amplitudes all the time. So like I said, British pound dollar went down. It's good for the traders that catch maybe some higher level. We got a very nice level during the US Open around 1.357, and if someone catch that price level,
that could be
now is in very good shape. I think more than 40 pips in profit, and this is
almost seems like we're becoming more swing trading.
Pretty good.
Okay.
I'm glad that price is going down. Better setups in the future, because I think a couple hours ago it was really hard to trade with that price levels. So we are approaching that level, which is around 1.351 or 1.35, somewhere there. Maybe there is a chance maybe that we can go either lower, but I don't know. What is very interesting for me, when we get the news, and news are good for British pound dollar, and British pound dollar reject that news, that circumstances, and start to go down, that means usually that the big players, they want a bigger correction here, and there is a chance that we can maybe see the lower price if this push today stays and we go outside choppiness. So it's a really interesting here.
Well, Tuesday's looking a little rough, guys.
We'll avoid buying British pound dollar, euro dollar to the end of the day.
What it is,
because
overall,
even that we are low, even that we oscillate, the price oscillates and everything, I think that there is nothing that can push the market in one
order canceled.
Stop fill.
I want to buy only on very low prices and vice versa. So this is
Igor, do you trade, because you're in Europe, right? So you trade during the London session as well, primarily, or the pound US dollar?
Breaking down.
Yes, of course. I trade and euro session and the US session, so there's no problem with sessions. Only I'm always try to get a good price. The problem is to get a good price, and this is the hardest way.
Yeah.
Yes.
The waiting.
Yes. So this is
order filled.
Order filled.
Yeah, this is the really interesting. I think that
our big
price for gold yesterday was.
We're doing pretty good on.
Very interesting. I mean, this shows something because you ask very good question for yesterday. It showed that on the relative strength index indicator to see better. So this was the trend. This was the trend, and just before the U.S. Open, or I think in the end of the Asia session, we started to break this down. And this price started to go down, and we got a push downside. And this is the moment just before the US Open. And what I did, I wait during the US Open to see higher prices. And when we reached this second bullish candle, it was just the end of on the US session and beginning the new hour and everything. I wait for that moment and enter into the price, and after that we got very nice 3 hours move down, and after that market was choppy. But what I like to see is when we break some trend line and we break some moment on the chart, I like that retesting period that we try to we break simple moving average 50, and we try again to retest or something. That's beautiful. That's really beautiful, because you get one beautiful chance to get a profit just from the market that retesting or recover from the drop. But it's very important that you are 100% sure that break breakout is a clear breakout. That's important.
Gotcha.
But look this for the gold. Fourth time when we broke the trend line, and that's beautiful. That's really beautiful, because after that, look, after that, how strong push downside we have.
Actually, that's not looking.
And that blue horizontal level that you got there on
problem
the
that
top,
I missed. This on the top, yes, it was the highest level that we got. Yeah. It was the highest high of the June 13 on the Friday. Yes, and it was as you can see, 3 times we retest that price level.
Order canceled.
Stop fill.
Early morning on the June 13, then during the US session, then and on the end of the day, and after that, after that 3 times retesting and rejection, we started to go down. But the problem was, in this period of time, the price was over, and the only thing that I could trade, and I trade, is to wait for some little pullback so I can enter into sell trade. But it's not powerful like you enter just in the moment when you're at some high or something like that.
Okay.
So this is it.
And Troy,
this is it.
Troy,
This is
what is
I
your
think
strategy today?
the call from the White House.
I'm sorry, can you say again?
Yeah, sorry, we're just having a little bit of a voice issue there. Thanks, Igor, firstly. I was going to ask Troy quickly, what do you look at, Troy, trading-wise, strategy-wise? Volume, structure, scalping, swinging.
Definitely scalping. Definitely scalping. You want the secret sauce, huh?
Yes, please. I can't wait to see it.
Always.
So I am a contra trend trader. So, when the market's going up, I'm usually losing money because I'm going short. But for the most part, and this is obviously something I need to work on. I want to buy high or sell highs and buy lows, right? And so I was actually very interested in Igor's charts because of his RSI. I am not an RSI fan, but I like the concept of overbought and oversold. I use MFI, which is the money flow index.
Yeah.
And actually, this is not to harass you at all. Currencies don't have a volume component. So RSI is the better choice, where MFI, it has a volume component.
Yeah.
And so for futures, the volume component is a piece of the supply and demand, right? And so I use MFI as my oscillator instead of RSI or stochastics because it incorporates the volume component. So I use the MFI for an oversold, overbought. So I'm only going to go long if it's oversold. I'm only going to go short if it's overbought, as a filter, sort of, or as a confirmation. I see so if I see a double tops, one of my favorite double tops and double bottoms in a very short term, and if it comes up to that double top and I'm not overbought, I'm going to avoid taking that trade, right? So,
and which time frames, Troy?
You're going to hate me. You're really going to hate me.
1 second.
I use a 30-second chart, and I trade. I actually use a 30-second as a front runner, and I trade off of a 1 or a 2 minute. So my entries are actually off of either a 1 or a 2 minute, but I'm using a 30-second as my leading indicator, so to speak. Okay. Very, very short term. I do somewhere between 10 and 50 trades in a day.
Wow.
you know, I'm looking for in the ES, I'm looking for 5 to 15 ticks. You know, if there's momentum, I'm willing to hold on longer, obviously. But I'm playing that little, you know, it's gotten too far, so I'm going to short it. It's gotten too far, so I'm going to go long. And I'm playing that reaction. So my favorite spot to short, and it's all about timing, of course, is when we're making new intraday highs. We make that intraday high, it pauses. I short it, it drops 5 to 10 ticks, I'm out. Okay, I'm playing that little reaction to the breakout.
Are you trading the minis or the micros, or vice versa?
I do both. On the NASDAQ, I trade the same strategy, but I'm going for obviously a lot more ticks. I'm usually going for 20 to 40 ticks instead of the 5 to 10 on the ES. I actually trade the NASDAQ more than I do the ES because there is more reactionary movement. So I can make more money faster trading the same basic setup versus the ES. When volatility gets even higher,
so if we're
I
looking at
continue
this
to
here,
move
right?
towards the
even though I
NASDAQ.
think we're going to take this as
I initially start with a 20 by 20. So I initially am a 1-to-1 risk on the ES. However, I almost always adjust my 20 tick risk to chart structure.
Red is taking
so as an example, if I'm shorting very close to the high, I'm going to move that stop down. If it takes out the high, I don't want to be in it anymore.
Almost.
Also, I'm predominantly short trader.
Like
I trade. I mean, I'm not very tall either, but I predominantly am a short side. In fact, to my detriment, unfortunately, I will short. You know, if you're talking about it, I'm already short. Okay. I mean, that's just sort of the way it is. In fact, when I do, you know, long-term trade evaluations, it's between 60 and 70% of my trades are short trades. You have to twist my arm and pull it behind my back to make me go long. And I guess it's just because I've become very skeptical as a trader. That I don't believe the move. I don't believe the move.
Order filled.
It's really hard right now because it's going up for no good reason. We've got all these macro events that should be making the market go down. I was going to ask you a question about your gold analysis. So from what I picked up is that you seem to be very technically based trader. And what I mean by that is, like, for instance, Saudi Arabia or OPEC has said we're going to increase supply through the summer months, and we also know that Trump has been trying to push American producers to produce, drill baby drill, right? And so it looks like Saudi Arabia is being preemptive and saying, hey, we're going to raise supply so prices go down, so we can hurt those American producers who have a higher cost structure. And to me, that's the macro view. But yet you're going long, and I understand you're going long because of the increased risk of Iran, Israel, but it's going against.
Not necessarily too much. I mean, you know, I'm not really planning on holding it for like a swing trade either. You know, it's like I'll monitor that thing, and if it's not going my way, I'm going to pull it. So what you've been seeing today is, like, also trade the NASDAQ and the ES. So using a bit more like, how can you say, money maker model type of things, different sessions, AM sessions, looking for liquidity sweeps or breaks, signs of reversal. But generally in a trade, I'm out of the trade 5-10 minutes. Now that's not your scalping. I don't know how long you're in a trade. You're probably in there for a few seconds.
Order filled.
You know, I'm not too fussed about what's happening in the macro view too much. And that's definitely not the. It's a plus point if with this war and stuff now, and them attacking the oil fields, that you could get that intraday push
Order
and
filled.
the momentum could be on your side. But in the bigger scheme of things, obviously, I do care that we don't pay too much at the pump. But, I'm willing to go long or short, depending on what I see on the chart. But you're right. I mean, like, bigger scheme of things, I do think what you're saying. Also, the bullish scenario that I explained on the higher time frames on crude oil, it might just be, again, in the back of my mind, some sort of a deeper correction upwards with a continuation lower at some stage. So,
Order
it's a
filled.
lot of play. It's like, a crude oil, just like the NASDAQ, when it gets a day where it wants to run, it can run big time.
Yeah, I have a hard time with crude because my macro view skews my technical view. And I think that's the big, at least for me, that's my challenge. My challenge is to not let the macro view overstep my short-term technical view. Gotcha. Because, what happens if, I'm just saying from oil perspective, what happens if Iran, Iraq suddenly stop and they sign a peace agreement? Oil's gonna drop. Same thing with Russia. What happens if Ukraine, Russia stops? All of a sudden, Russia is hurting so bad.
Yeah,
they are gonna pump so much oil.
These days, you can get the news over a tweet, right? Or they could just be in a call right now. You don't know that, and boom. It goes
that
the
makes
opposite
me
direction.
So nervous on the long side for oil. And of course I would be going, okay, it's coming up, where is going to turn over? And I'm looking for that turnover point to be on the short side, which in the short run is going against the trend, right? The trend is up. And so I mean, that's my struggle. And listening to you, I'm like my whole brain's going, but wait a minute, right? But you're totally right when you look at the technicals on a short-term basis, and I think that's a struggle. I don't know if you struggle with that. I struggle with.
I struggle to do swing trading like Igor and some of the other coaches, for example. Once I start seeing a nice strong move, I want to really be out of it. I want the price to hit my targets, and I want to sleep at night. I will trade options longer term. That's not a problem. But at least there, I've got some more control, especially if I buy or sell options or do combos, longer time frame out, where you can actually, if things don't go your way, try to sort of rescue the position. So I find, for me personally, option the vehicle to trade that longer term is I prefer that. We're in a shorter term, like this trade now, it's going in my favor, but I'm not going to hold it because a year afterwards, I have to shoot home. It's nearly 5 o'clock, 4:45 p.m. here in South Africa. And then step away from the PC. I don't want to actually monitor it on the phone. I also got my work desk or trading PC solely for trading at an office away from work. So I don't work from home. So I need to disconnect when I go to the office. I do obviously work with you guys, which is awesome. Involved in more like the teaching side, the education side of things. But when it comes to trading, I think when I go home, I don't want to be worrying about a position. And I've been burned many times, like, trading and something happens and all of a sudden you sit with a gap against you. Something like we just talked about, a tweet comes out or there's some peacemaking deal. And in this day and age, it happens just like that. You know what I mean? Out of the blue, and you're sitting on the wrong side of a trade and you lost more than you were looking to lose in the first place or risk in the first place. But then again, I mean, Igor, you guys, when you do take swing trades, you don't go with the heck of a big lot size either. Am I right in saying that?
Yes. I reduce position size a lot. So there is one trade that I repeat very often, and this is why I repeat this sentence very often, related to the stock traders, because stock traders, they see very often highest highs, and they can make a swing trade sometimes and find a V shape, because when you have a fresh high, you can try that. In Forex market, there's always is some kind of range, and that range is so frustrating. And the only thing is, if you have a bullish scenario to catch the low, or if you have a bearish scenario to catch the high, and that can be very good strategy. And but you need to have a bias. For example, right now, I just talked about British pound dollar. In the moment when I start to talk about that, we had price 1.357.
I love it.
It was the high.
I love it.
And
love it, guys.
that now we have 70 pips down there
for the day.
It was a beautiful trade, but I didn't have the bearish bias clear, and I didn't enter into the trade. So the problem is to have a good bias. This is the problem every single time when I have a losing trade.
Gotcha.
Yeah, I find out that some of my students, because they do not have a market background or a macroeconomic background, that they do better because they're just not paying any attention to. They're following what they see on the chart exclusively, and they don't worry about those unforeseen things. They just trade what they see in front of them. That's become one of my mantras: is trade what you see, not what you think. Right. But unfortunately for me, I have a master's in, I got 30 years ago, but it was in economics, and so I just love that those macro movements and ideas, and it really skews your short-term trading, and that's something you have to be very careful about.
It's also very difficult to unlearn bad habits. If you've been trading for so long, it's extremely difficult. I mean, the challenge is ongoing. It's like I was telling what was it, Yanni, the other day. It's like I know a few guys that like engineers that they just struggle to trade.
Order
because
filled.
when they're wrong about things, they want to know exactly why. The markets don't behave like that. You can't overanalyze things. It's like you said, it's probably easier for a child to just show them a chart. Is the market going up or down? Where should I buy or sell? Basic techniques, and in many cases,
order
try
canceled.
to stop filled. As possible, I think.
I 100% agree.
You're right.
This
James, are we doing on time here now?
Order canceled.
Reached the end of a session. Let's just have a look.
Yes.
Yeah, we're pretty much there. So,
it's great meeting
any
you
closing
guys.
thoughts? Robert, Robert's giving you some compliments there, Troy. It's good to hear Troy's thoughts on economics and trading correlation. He needed that, so perfect. Well done. Thanks for that, Troy.
Thank you, Robert.
Order canceled.
I just want to add something.
Off to work at this time. Sorry, Igor, I'm talking over you.
Just to add something, just to say thank you to Troy, because you really give us some kind of the theoretical background with the practical problems in the US. And thank you a lot for that, because we don't live in US, and sometimes we need to get a clear picture how the situation is complicated. So thank you for your thoughts and everything.
And well handled, without siding.
I mean, yes, you have to be that way. You have to look at the market as objectively as possible. And
100%.
Right, we call a spade a spade.
Okay,
so,
I gotta go. All the love, guys.
It is what it is.
We're gonna end on
I love hearing your
day.
guys' opinion of the U.S. I was teasing Yanni and Paul because they had a very distinct opinion about the U.S. and I thought it was very amusing. So it's back at you.
Well, the US amuses us quite a lot here in South Africa too. Don't you worry.
All right,
in any
peace.
case,
All the
Troy, Igor, fellas, thank you so much.
All right.
To see you soon.